bit of cash down here just now. That's nice. That's caused the price to bounce quite a bit there, guys. As soon as we started to book some profits, obviously it was a measure, and that measure's just caused the bounce from the short-term sellers. So nothing wrong with that. We'll take it. You know, as I said, we know where it is, so we get in before the idiot buyers start coming in. We buy it on a downtick. We buy it on a downtick. So we told you about yesterday. We told you about dollar risk sentiment, and if you look at what we tweeted here at 3:36, you can see that the dollar is now taking profits. The dollar's taking profits. So in other words, there's an end to the risk sentiment positive tone at this stage. So the dollar shorts are taking profits. What does that mean to the dollar index? It's going to go up, doesn't it? So that's the end of the up move. 336, guys, 336. So what does that mean we start doing at 336 on the S&P? What does that mean we start doing at 336 on the S&P? What do you think it means? What do you think it means? What do you think it means? At 3:36 p.m., we start selling some top edge S&P. Guess what happened? There's a 3:36 sell coming in right there, 3:35 and 30 seconds, 3:36. We start selling some S&P off the 4420s. And then the price gets absolutely mauled till we reach a measure. And then we start buying back some of our product here. And we get this buy-side profit-taking bounce. You can't make it up. Second day in a row, we've given you that dollar change. And second day in a row, we've had a perfect bottom edge. And now we've got a perfect top edge. Pretty good stuff. That's okay. It'll do. It'll do, donkey. Change of sentiment, guys. We talked about it yesterday. We talked about it at length today. About watching for any activity on the dollar to give us those sentiment change narratives. And we tweeted it so that you could join in. And sure enough, you had about 30 seconds to a minute to join in after the tweet. And sell side off the 20s reached a low price of 13s. 7 points, $350 per contract on the short side. And that is how easy it can be to make some easy money, which we like, of course. Sexy, like a box of chocolate. DVO1s have gone well out of skew, guys, with the knob spread giving us a big pop to the downside. So that's very, very interesting, isn't it? You'll see that knob spread changing. The bond hasn't even moved, so it's all in the tens, guys. It's all in the tens, which makes life very, very interesting from a, you know, from the overall perspective. And we did see the fight just popping its head out the top edge ever so briefly. And allowing you to buy up some more bonds at 21, 22s, but it's again failed for the fourth time. It's failed at the moment to get any movement. But I love the DVO1 setup. Love the DVO1 setup just now on the long bond. But obviously, it's still looking at the equities and saying if it sells off, this is going to be a great buy for us this afternoon, guys. This is going to be a brilliant buy for us this afternoon if equity sell off. Now the curves went back to normal. It's just in a normal widening. But with the belly dropping off a little bit at the top edge, we should be able to buy bottom edge bonds. I mean, that should be an absolute given that we should be able to buy bottom edge bonds. So, yeah, we've just got to keep working that bottom edge bond, guys. It's as simple as that. We've got to keep working it. You may be wondering about the inflation break-evens. giving us a bit of a problem with oil prices going higher just now, and that is a bit of a problem. But interestingly enough, the inflation break-evens on the bond market actually suggesting the opposite. We're actually getting a little bit of buy opportunity pressure with the inflation break-evens. So we know there's a difference of opinion here between oil prices and the bond inflation break-evens, and we're aware of it. We can deal with that. We can work our way around that concept. So we do have to be cautious, certainly cautious with the oil price going higher through this. But we came off our buy level here. If anybody's still long the oil, then a nice opportunity to book some profits in here. But it's still going. Did not expect it to extend in the US session, but we've had some pretty easy upside because of the bond market, of course. The oil price going in line with that overall shape of yield, but yield starting to pause now. Yield starting to pause now, guys. So I really like the S&P shorts. I think it was a good trade. If you understood the classroom I did this morning, you would have possibly have rejoined the sell back at 17.5 to try and work it back down to the previous swing low. If you did, good stuff. I like your style. I like your style. What else have we seen this morning? I mean, when you look at 5-year break evens and 10-year break evens, this oil move higher really is